It's Tuesday, that means it's Training Tip Tuesday. And for some of you who know who I am and what I do, you probably saw this one coming eventually, but let's talk about the Ichimoku Cloud. Let's take a crash course. Let's see if I can do this in 10 minutes and make you a cloud expert in what took me, 2013, 7 years to figure out. So the cloud is a trend following indicator designed to capture 80% of any given trend using a series of moving average type lines that are called the cloud. They have other names, but for simplification's sake, this is the cloud, this is the tenkin, this is the kijun, this is the lagging span or chiku span, sort of the least important but sometimes relevant part of the cloud. It's called the cloud mainly because of the shape of the colors that are created over time. You can also think of it as a dynamic system of support and resistance. The settings I use are 2060, 120/30. It'll take a separate video to even explain why, but I've found these are the best settings that work for me. These are the least noisiest settings that work for me. These are the settings that produce the highest probability signals for me. This may not work best for you, but for me, this is what works. Similar to using the 20 moving average versus the 50 and the 200, use what works for you. There will be people who will be disagreeing with this, but use what works for you. This is what works for me. All right, so these are the settings. These are the naming, the nomenclature. Again, 80% of the trend, so keep that in mind. It does tell you entries, it does tell you exits, which is one of the reasons why I love it oh so much. Let's take a look at long entry signals. Where does it tell you to go long? You can backtest this. That's another thing I love about the cloud. For you backtesting people, it's not that hard to actually backtest this manually because these signals with these settings on this time frame don't happen very often. So here's one such long entry signal that occurred in October. 4 things you're looking for. You're looking for a bullish cloud. You're looking for price above the cloud. You're looking for a bullish TK cross, which is blue over red or fast over slow for you moving average aficionados. And lastly, lagging span above price and cloud, which is this faint green line here. So this is a picturesque textbook entry signal for the long side. And what do you know? That was at 11.3. We get a 50 to 60% upside. Still going, by the way. This hasn't exited on the cloud. I'll explain what an exit signal looks like, but this was your entry signal, okay? And again, backtest this all you want on the daily. Look at everything. Look at every chart, every system, look at it on the oil. Look at it on silver, gold. Look at it on anything you want. And then come at me with backtesting results, okay? But just take a look at it for yourself. I'm not selling a system. I don't sell anything. I'm just saying it works. Okay. Here's another such example of a long entry, or what I would look for in anticipation of a long entry. We get what's known here as a bullish Kumo breakout. Is the cloud green yet? It is not. So you can either follow all of the steps or choose to enter a position slowly over time. You can say to yourself, all right, this is a bullish Kumo breakout, which is what this is called, Kumo being the cloud. Bullish Kumo breakout, bullish TK cross, do not have a green cloud yet, but it looks like it probably will cross green. So why don't I buy some here? Dip my toe in, right? And then if it crosses green, I continue to add to the position. That's one way to trade this. But the biggest thing this provides for me is a way to look at the trend flip, the trend entries and exits before they happen, right? This is, you could say, all right, you missed the bottom, right? Whatever, I don't care. This is a trend reversal situation, prices above the cloud. You can look at the chart to see where that went. It was bullish. Here's another example, bullish Kumo breakout. You can see we had this insane consolidation, multi-month, insane reversal, bullish Kumo breakout, lagging span, peaking above the cloud, above the price, and a bullish cloud. And again, this was at 5K. You can look to see where that went in the coming months. This isn't to say that every single Kumo breakout or every single long entry signal will produce 50, 60, 100% trends. That's irrelevant. All that matters is the system telling you to go long or short or open or close reliably with results that make sense. What happens after this is irrelevant, really, because it told you to go long, and I'll show you where it told you to close your long in a second. But this is exactly the kind of long entry signal you're looking for. You could say, all right, this is a little, I don't want to buy after a 200% candle. I agree with you, but this is one example of a bullish Kumo breakout. This was another one. I'd much rather be a buyer here than a buyer after a giant move like this. But nevertheless, it kept going. Here's an example of a short entry signal. Price below cloud, bearish TK cross, lagging span below price below cloud. Basically the opposite of a long entry signal. This was in 2018, right? Something like that. Where we had that mega month, like year-long consolidation. So you can see the price will go into the cloud, but when it goes out of the cloud again, that is your short entry signal, bearish TK cross. This even, this kept consolidating sideways. This didn't exactly continue strongly bearish for a few months, into November. So this took a while, but the whole time the cloud is telling you, this is a short, this is a short, this is a short, this is a short. Never once did it tell you, go long here, this is a good trade. We can argue about trend reversals and all that sort of stuff, but the system never told you to go long. Here's another example of a short. This is from like 2014, I think. Exactly what you want to see. Bearish Kumo breakout, price below cloud. Lagging span below cloud, below price, bearish cloud. Boom. I said in the link article posted today, or whenever anybody watches this video, about a potential bullish Kumo breakout on link. That's when I get excited to look for this stuff, because it's before it happens, right? Like, you're looking at stuff like this. You're in April 13th. You're anticipating the potential for a bullish Kumo breakout on the daily. That's the most exciting time to watch the cloud for me, because it tells me exactly when I should enter the trade. No sooner. All right, so that's a bullish and bearish entries. Here are the bullish and bearish exits. So like I said, on that bullish Kumo breakout here, 80% of the trend, your exit is on July, 30th, whatever this is. You're basically exiting when the TK lines cross bearish. For some people, this will be too slow. You can use other stuff like Williams fractal stop losses, which I won't explain in this video. But there are ways around using just the TK lines for the exit. And again, here, if you were short from that 2018 bearish Kumo breakout, over and over again, your long exit, or your short exit, my bad, is this bullish TK cross below the cloud. Like, look how perfect that is before all the madness happens on the bull side. And again, the bearish TK cross above the cloud is your long exit before all the shenanigans happened over the course of the next few months. So when I see this on the daily chart for any coin, when I see these signals happening, that's a big, big trend shift indicator, because if we are busting through the cloud on the daily, that says watch out, because this is bullish now. If we are busting below on the daily, that says watch out, we are bearish now. One of the reasons why I love the cloud. Some people don't even use the TK lines. Some people just trade based on the cloud itself, which is fine. There's nothing wrong with that. I just like to use like the fine tune of the TK lines for exit, entry, re-exit, that sort of thing. But it's perfectly valid to just trade off of the cloud itself. You get into trouble with stuff like this where price is above the cloud, but the TK lines are bearish, but you don't know that if you're not looking at them. So this is one of the reasons, specifically right there, to actually use the TK lines to save yourself from yourself. For the most part, though, just trading off the cloud, entries and exits, is pretty great. You can see you go long here, you close here, you go long here, you close here, you go long again here, and you're still holding. Or you're short here, you still hold short this whole time, you close here. We never got, this is the other crazy part. The cloud prints 30 periods ahead of time, and we never got a close on the daily into the cloud this whole time in November, September 2019. And I'll show you why that's interesting in a second, but it's always eerie when that happens, because it prints before price does. Like, how does it know, right? How does it know? All right. Let's talk about edge-to-edge trades. These are reversal trades. We want price inside of the cloud. We want a confluent TK cross, and the target is the opposite edge of the cloud. So by confluent TK cross, I mean if we're expecting a bullish move, we want a bullish TK cross. One of the reasons I started trading these was because I saw the opportunity for just massive risk-reward on these trend reversals, even though it's not traditional cloud trading, let's say, like price isn't above or below the cloud. In general, the cloud is seen as a non-determinate trend or no trade zone. But for these specific entries and exits, that's what I like. And here was the entry, exit was up here, and obviously that worked out beautifully. Here's an active one on band, which I've been watching for several weeks. Expectation is bullish to the $10 mark plus. You can see how this might, meander in the cloud for a while, as it did for Bitcoin in 2019. Here is ETH weekly. You can see upside here was 750, 470 to 750 basically, and we're above 470 now, right? And you can even cheat this a little bit by entering before you get your bullish TK cross. Sometimes it's late, sometimes it doesn't make sense, but nonetheless, the edge-to-edge trade expectation is there. Here's how it looks now as far as what you got. The difficulty with this trade is if the cloud is huge, it can literally hit the top and the bottom in the same day. I mean, expect anything when it's in the cloud. There's no trend there. It just says this is the range that price may hit. Here's one of the more famous edge-to-edge trades as far as cloud is concerned on crypto. This was a weekly BTC chart, and I'd been watching this in late 2015 when I started talking about this on Twitter and wherever else, but it ended up working out. And the system told you what to do, when to do it. Stop loss for these type of trades is the Kijun usually, and the stop loss for anything is generally the cloud. So if price dips into the cloud, if you're long and price dips into the cloud, you're out. The Kijun should be treated as support. So you want the Kijun above the cloud to use that as support, as well as a re-entry signal. And speaking of re-entry signals, here's a super rare event. Again, I love this because it satisfies the satiation, is that the right word, of the backtesting people. They are fulfilled in their backtesting needs because these events happen almost never. It's happened like 5 times in BTC, 3 times in ETH. When you get a bullish TK recross above the cloud, that says price has been bullish. It's reconsolidated and decided, you know what, we're bullish again. That is an extremely strong indicator of trend continuation, which is why when I see this stuff, I'm like, okay, it's game on, let's go. And we can argue about the Kijun crossing over the Tenkin, or the minutia of that. But the bottom line is the TK lines are crossing. Bullish above the cloud, bearish below the cloud. You can see what happened in 2017. We got 4 of those bullish TK recrosses above the cloud. In 2018, we got 3 bearish TK recrosses, 2 of which were below the cloud. Maybe 3 if you count that mini one here. But the cloud usually doesn't lie to you as far as what's going on. It's pretty black and white. It might look difficult to understand, but it's pretty easy if you know some very simple things. And lastly, I want to talk about using the TK lines as an oscillator, kind of what I'm worried about right now for BTC on December 15th, 2020. Similar to any mean reversion principle with any moving average, if price is overextended from your moving averages, fast or slow, at some point there will be a correction, there will be a retracement. That happens on everything forever and always. So the farther the trusted TK lines get above or below price, in this case the daily using these settings, I say to myself, okay, this is overbought because we are way above those TK lines. You can see what it looks like before and after the fact. This is 2017 again. Sometimes it's not as obvious, sometimes it's super obvious. But you see this TK disequilibrium, and you think to yourself, okay, I should be careful going long here because we are severely overbought. There will be a mean reversion. In 2019, 2018, there was a massive C-clamp or TK disequilibrium here on the daily. This says we are extremely oversold. The mean is way up here. Price wants to mean revert. Either price will mean revert to the Kijun, or price will remain sideways and wait for the Kijun to catch up to price. In any case, this says we're oversold. Shorts probably don't have a lot of momentum here. So when I look at the current price, I say to myself, okay, fundamentally everything's happening that is happening. Everybody and their mother's buying, all the institutions are getting in, saying they're getting in, saying they got in, whatever. But when I look at the technicals here, and I look at this TK disequilibrium, I get extremely worried for the long side because I know what's happened historically. Historically, when we look like this, we get a mean reversion. The other thing to pay attention to here is the momentum itself is flat. Tenkin is flat, Kijun is flat, Cloud is flat. Something I didn't mention is, in general, when you get a trend, you want everything to be close to price. You want Cloud to be skinny, TK lines to be closely together, opposite of a disequilibrium. So this says we're oversold, expect a reversal, be careful going long. Doesn't necessarily say short, but it says be extremely careful up here because we're creating a situation in which the mean reversion side is looking better and better every day. So hopefully this little crash course in the Cloud was helpful. If you've never heard of the Cloud, or if you have and reminded you of some things you've not heard of, let me know in the comments. Let me know what you think. If you have any more specific Cloud questions or setups or charts, feel free to share those as well. And happy trading.